Everyone thinks a bank's primary purpose is legitimate finance. They are wrong. For years, the Bank of Credit and Commerce International, or BCCI, operated under a veneer of respectability. It was a sprawling global institution, seemingly a beacon of ambition from the developing world. But beneath the polished facade, BCCI was something far more sinister, a financial haven for drug lords, corrupt politicians, arms dealers, and intelligence agencies. Its collapse in July 1991 didn't just rattle the financial markets. It exposed a clandestine network of illicit activities so vast and interconnected that it implicated some of the most powerful figures on Earth. This wasn't merely a business failure. It was the unraveling of a criminal enterprise masquerading as a bank. The story begins in 1972 with Agha Hassan Abedi, a charismatic Pakistani banker. He envisioned a bank that would serve the developing world, a counterpoint to the established Western financial institutions. With significant backing from Sheikh Zayed bin Sultan Al Nahyan of Abu Dhabi, BCCI was born. From its modest beginnings in Luxembourg, BCCI expanded at an astonishing rate. By the mid-1980s, it had branches in 78 countries, from London to Hong Kong, from the Cayman Islands to the United States. This rapid growth, however, was built on a foundation of deliberately obscured ownership and a labyrinthine corporate structure. BCCI operated with what investigators would later describe as a bank within a bank. There was the official, regulated face, and then there was the Black Network, a clandestine operation dedicated to serving clients who preferred to keep their financial dealings far from the eyes of legitimate authorities. This Black Network facilitated everything from money laundering for drug cartels to funding for covert arms deals. Its clients included figures like Manuel Noriega, the Panamanian dictator, and various intelligence agencies, all seeking discreet financial channels. One of BCCI's most notorious services was reinvoicing. This involved manipulating trade invoices to move money across borders without detection, essentially creating fake transactions to justify illicit fund transfers. It was a sophisticated method of obscuring the true origin and destination of vast sums. The bank also engaged in massive loan fraud. Loans were made to insiders and their associates, often with little to no collateral, and then written off. These losses were then hidden through a complex web of shell companies and offshore entities, making it nearly impossible for auditors to trace. The sheer scale of the deception required complicity at every level. Regulators, auditors, and even governments were either deliberately misled, compromised, or simply overwhelmed by BCCI's intricate structure and global reach. Early warnings about BCCI dubious practices began to surface in the mid-1980s. Journalists, particularly in the US, started digging into the bank's opaque dealings and suspicious client list. But these early alarms were often dismissed or met with fierce resistance from BCCI well-connected legal teams. A key turning point came in 1988 when U.S. Customs launched Operation Sea Chase. This undercover investigation targeted drug money laundering operations in Florida, and it ultimately led agents straight to BCCI. The operation culminated in the arrest of several BCCI officials in Tampa. The arrests revealed a pattern of systematic money laundering for the Medellin cartel, a major Colombian drug trafficking organization. This was no isolated incident. It was proof of BCCI's deep involvement in facilitating global drug trade. Despite these damning revelations, BCCI continued to operate. The bank's intricate structure, with multiple holding companies in various jurisdictions, allowed it to evade comprehensive oversight. Regulators in one country often couldn't see the full picture of its operations elsewhere. The beginning of the end for BCCI arrived in 1990. The Bank of England, having received a confidential report from auditors Price Waterhouse detailing widespread fraud, began to coordinate a global regulatory response. The report painted a grim picture of insolvency and criminal activity. On July 5, 1991, regulators in 7 countries, including the UK, the US, and Luxembourg simultaneously seized BCCI assets and closed its doors. It was an unprecedented coordinated action, reflecting the global scale of the fraud. The collapse sent shockwaves through the financial world. Depositors, including many legitimate businesses and individuals, lost billions. Governments were left scrambling to understand the full extent of the damage and the implications for global financial stability. Investigations that followed uncovered a staggering trail of corruption. It was revealed that BCCI had laundered money for figures linked to terrorism, funded illegal arms deals for various regimes, and even maintained accounts for individuals with ties to intelligence operations. The bank's reach extended into political circles, too. Prominent individuals, including former U.S. President Jimmy Carter, found themselves embroiled as their charitable foundations had accepted donations from BCCI-linked sources, albeit unknowingly. One of the most significant figures to emerge from the scandal was Robert Maxwell, the British media mogul. He had used BCCI to prop up his failing empire, allegedly siphoning off pension funds to cover his debts. His mysterious death at sea shortly after BCCI collapse only added to the intrigue. The BCCI scandal exposed critical vulnerabilities in global financial regulation. It highlighted how a bank, through deliberate obfuscation and a lack of international coordination, could become a vehicle for widespread criminal activity. In the aftermath, significant reforms were implemented. International cooperation between financial regulators increased dramatically, and efforts to combat money laundering became more sophisticated. The concept of know your customer became a cornerstone of banking compliance. Yet the legacy of BCCI lingers. It serves as a stark reminder of the corrosive power of unchecked greed and the persistent challenge of policing global finance. The Bank for Criminals showed just how deeply illicit money can infiltrate the legitimate economic system. The total losses from the BCCI collapse are estimated to be in the tens of billions of dollars, making it one of the largest financial frauds in history. The full truth of every transaction, every covert deal, may never be completely known, lost in the intricate web it created. BCCI was not just a bank. It was a shadow state, an institution that demonstrated the terrifying potential for financial entities to operate beyond the law, shaping geopolitical events from behind a veil of secrecy. Explore another financial saga that changed the world forever.